6050W and Farmers Markets Electronic Payment Reporting Requirements webinar. This webinar is being co-hosted by the Food Assistance Partnership of the Michigan Farmers Market Association and the Farmers Market Coalition. So this is Amanda Steger with the Michigan Farmers Market Food Assistance Partnership, and we're very pleased to be co-hosting this great webinar to bring you information. We are going to try to stick to the agenda you see before you. I'm going to do a brief introduction and welcome, and then we're going to hear from Erin McGuire of Congresswoman Pingree's office, and she's going to give us an introduction to IRS 6050W, how it came about, and then how it was interpreted for the farmers market audience. Then we'll hear from Stacy Miller of the Farmers Market Coalition on what IRS 6050W means for your market. And because record keeping is so integral to this process, I'll then offer some strategies for record keeping and share with you some example spreadsheets that you can use for your market. And we'll finish off with question and answer period. And we'll give you more information then about how you can give us your question over the phone or through your computer. In the meantime, if you have any questions, you're welcome to enter them into the chat box on the right-hand side of your screen. I want to get started with just a brief welcome. Because this is a national audience that I'm speaking to, I wanted to introduce you briefly to our organization. We're the Michigan Farmers Market Organization, and I work specifically with the Food Assistance Partnership. Our partnership was started in 2007 and was co-hosted at the time with the Michigan Food Policy Council. Today, we're a group of over 50 partners that includes farmers markets, state agencies, nonprofit organizations, and other local food system stakeholders. And we work to help farmers markets accept food assistance benefits, including SNAP, or the Supplemental Nutrition Assistance Program, which we're going to be specifically talking about today, the Farmers Market Nutrition Program, and then hopefully in the near future, the WIC program. So in Michigan, we call our Supplemental Nutrition Assistance Program EBT card the Bridge Card because it has a picture of the Mackinac Bridge. And this map shows you where in Michigan we have farmers markets that are accepting that technology. This year, we have approximately 82 farmers markets in the state accepting the Bridge Card. That's about 32% of the current farmers markets operating in the state. That's an increase over 50 last year and 3 in 2007 when our work began. We look forward to the future when a far greater percentage of the present farmers markets accept Bridge Cards. A little more background. This chart shows the number of farmers markets in the background, and then in the forefront, the number of markets accepting Bridge Cards and the percent of markets accepting Bridge Cards. And this is just to show you how far we've come and how far yet we have to go. I also wanted to share with you, for a little more context, the dollar amount of SNAP transactions that are taking place at farmers markets in Michigan. In 2009, almost $300,000. Last year, $705,000. And this year, rumor has it, we're over $1 million. So we're really excited about that. So without further introduction, I want to turn it over to Erin McGuire, and she's going to get us into the discussion today about IRS 6050W. I'm sharing the screen with Erin so that she can address you all.
All right. Let's see. Thank you very much. So my name's Erin McGuire, and I'm just going to make sure I have it. There we go. There's me and our Reg Laws mascot in Maine. So my name's Erin McGuire, and I work for Congresswoman Pingree, who represents the 1st District of Maine. and I work on her agriculture team in Maine and in Washington, D.C. And I'm just going to give you a little bit of a background on how we came to learn about the 650W rule, a little legislative background on it, and what we ultimately did to address the issue. So my boss is Congresswoman Shelley Pingree, and she was recently appointed to the Agriculture Committee, which has definitely heightened her interest in farming and food. However, Shelley has always been interested in these issues. She's been a farmer since the 70s when she moved to Maine as a part of the Back to the Land movement. Currently, Shelley owns a farm on North Haven, an island off the coast of Maine, which is pictured here. It's Turner Farm, as well as being a member of Congress. She has a personal interest in these issues, and from day one in the Agriculture Committee has really been vocal about the importance of local food. And to this end, she's working with 20 national organizations to develop a local foods title to the Farm Bill. And this bill, the local foods title, will promote all aspects of the local food economy and infrastructure by promoting programs already in the Farm Bill and also creating some new programs to support local agriculture. But of specific interest, I think, to this crowd would be the nutrition title. They're giving greater access to senior farmers market promotion program, as well as giving market managers more tools to use EBT card readers, and other, I think, great additions to the nutrition title. And if you want more information on that, I'm happy to give you my contact information as well as Claire Benjamin's contact information, who's really spearheading that in our office. Here we go. I got ahead of myself. So we've been very involved in the local agriculture economy in Maine, and to this end, we have had quite a few meetings with the State Department of Agriculture to help farmers markets in Maine better use EBT card readers. And in Maine, our farmers markets are almost exclusively volunteer run. We have little to no infrastructure. It's really farmers getting out there and taking turns organizing the market. So they have all kinds of issues with EBT card readers. And during a meeting with the State Department of Agriculture, they made it very clear to us that the 650W rule was going to be a huge issue for them to comply with, even to show that they weren't a part of the 650W rule was going to be difficult for them. And that's the first time our boss, which was this past summer, really my boss found out about the 650W rule. So we started doing a lot more research into it. The bill was first passed, the 650W rule was first passed in 2008 with a set of reforms in the Housing Assistance Act, which was part of the larger Housing and Economic Recovery Act. And it basically, the Housing and Economic Recovery Act changed a whole bunch of laws relating to housing and mortgages. And more specifically, this bill defined third-party networks and required them to report income to the IRS. As it was reported out by the House Ways and Means Committee, 650W was originally intended to capture income received through credit and debit card actions, which were previously not reported to the Internal Revenue Service. So starting this year, in 2011, card payment processors will be required to report gross annual receipts to the IRS for businesses with vendor accounts. So although these laws were originally intended for large third-party networks, such as PayPal, there were a number of smaller entities that the IRS didn't expect to fit into the definition, but farmers markets that use scrip systems for credit card and EBT card purchases ended up fitting into the definition. There it is. And so I just wanted to briefly go through what a third-party network looks like in the 650W rule, because it was something that we certainly had to describe to the IRS, and it was something that they weren't aware of. But basically, the farmer's market, the central payer, swipes the consumer's EBT card, or credit card or debit card, and gives them tokens in order to spend at the market. So that's the first transaction. And then the consumer uses those tokens to pay the vendor or the payee, which is your individual farmers at the farmer's market. And that's the second transaction. And then we get the vendor who trades in those tokens to the farmer's market or central payer. And the central payer gives the vendor cash for those tokens. And ultimately, this ends up being a third-party network. And there's a number of exceptions that Stacy will talk about, but just so that you have an idea of what we had to explain to the IRS. And so when this rule was first issued as a part of the Housing and Economic Recovery Act of 2008, they gave the IRS broad jurisdiction to come up with how to implement the 650W rule. And it says, which I just think is funny because it's so vague, such returns shall be made at such time and in such form and manner as the Secretary may require by the regulations. So they really had wide implementing authority. Oops, I skipped ahead of myself. So when a rule is issued, and we're talking about the 650W rule, the IRS is required to give a public comment period. So they will issue the rule and then notify parties who will be affected by this rule in order for them to weigh in on the rule before it becomes final. And in this case, because the IRS didn't realize that farmers markets and other small third-party networks were going to be subject to the rule, they never notified those interested parties. And then, so that was sort of the first hit for farmers markets, is that they were never able to give their thoughts and opinions about how this rule would affect them. But once the final rule did go into place, the Food and Nutrition Service, who has jurisdiction over EBT card readers at farmers markets, nor the IRS notified farmers markets, if they even knew, that they were going to be subject to the 650W rule. So a lot of farmers markets and market managers ended up being subject to a rule that they actually had no idea they were subject to. So in order to get better clarification, my boss met with Secretary Kathleen Merrigan, Deputy Secretary Kathleen Merrigan, about the issue, as well as several other members of the House Agriculture Committee, who also had markets expressing frustration in their own districts. So after going through many of our agriculture connections, it became clear that we needed to approach the Internal Revenue Service directly for clarification on how they would interpret the 650W rule for farmers markets. Because there really seemed to be no information available to markets on how to be compliant with the 650W rule, even though they had been subject to this rule since January of 2011. So lots of farmers market managers actually found out in the middle of the summer that they had been subject to this rule for 6 months. So at that point, we teamed up with, I got ahead of myself again, we teamed up with Stacy and the Farmers Market Coalition to write a letter to the IRS asking that they give guidance to farmers markets, which they hadn't anywhere before. And with the help of 14 members of Congress and staff at the IRS and FNS, we were able to write the letter to the IRS, and this is the letter that my boss sent with 14 other members of Congress. And after this letter was sent, we really started working with the IRS to gain guidance. And as Stacy, I think, will go through with you in more detail, farmers markets are subject to the 650W rule, but there are lots of exemptions that allow farmers markets to not have to to report that income that they get through the scrip system. So with that, I want to thank you for being here and pass it over to Stacy. Thank you.
Hi, thank you so much, Erin. That was fantastic. I hope that was a useful background for everybody. And I just want to, credit Erin, the folks in her office for so much work in trying to assist us with this effort. So, so this is me, Stacy Miller with the Farmers Market Coalition, and as Amanda gave us a little outline, I'm going to give hopefully a little more insight onto how this can impact you. So in addition to the background that Erin shared, the final rule for this 6050W was back in October 2010. There was a comment period that lasted until towards the end of January. It wasn't until after the close of that comment period that the Food and Nutrition Service and USDA, which had over, I think, 130 retailers that were going to be subject to this, to communicate to, that they weren't even aware of it until after the closing of that comment period. And it was through them that I first learned about it, and we knew that it was going to be a challenge to really make any change if needed, because it was so late in the game. So as Erin described, farmers markets were just not on the radar, and it was kind of difficult to get information or concrete information. The IRS is very reluctant to put things in writing, so and then anything that you rely upon in a casual, email or phone call, you can't necessarily rely on that unless it's in writing, and that can take several months for them to put anything in writing. So, so we were a little bit on the fence throughout a lot of this time, and I'm also really grateful that we had the support of a law firm, Latham & Watkins, who devoted some pro bono time to us to beginning that conversation with IRS last spring. So my illustration here isn't quite as illustrative as Erin's, but this is how we interpreted the basic relationship, the third-party network transaction relationship that farmers markets are, and this is what we provided to the IRS to help them understand some of this. It turns out that the way that they interpreted farmers markets was a little bit different than what we had expected to them. So the letter that Erin showed you was based on the interpretation that we had from legal guidance, and it turns out that the IRS had a very different interpretation than they had even indicated on several phone calls with us. So it's lucky that we didn't give you any advice based on that at the time, and we waited until we had gotten further clarification. Having trouble advancing my slides. Hold on. Okay, I won't dwell too much on these boring glossary terms, but for those of you, you may have already gotten letters indicating something about this this rule, electronic reporting payment requirements that your merchant acquiring entity is responsible for. So your merchant acquiring entity is whoever your bank is that you work with in order to process electronic transactions. That's who you get your statements from, basically. The payee in the situations we're referring to is really a farmer or a vendor, anyone in your market that is ultimately receiving payment thanks to an electronic transaction. The farmer's market in a model where there's a scrip system, there's one central terminal and a scrip system through which the market reimburses its farmers. That market is referred to as a third-party settlement organization or a central payor. So when you see those terms, that's how a farmer's market would be referred to. The payee would be any one of the vendors is participating in that settlement organization. So third-party network, for our purposes, is the system which the market has, and to which it has a number of people to whom it's making reimbursements. The IRS created a threshold for its interpretation of what a third-party network is. So it needs to have a substantial number of persons, which it defines as 50 or more, to whom payment is made to. So you need to have 50 or more participating payees, which are, in effect, your farmers, your vendors. So that's the threshold in terms of size of your network. Okay, so what's eligible for reporting? Again, this is debit, credit, EBT, any electronic transaction. And then I noted in italics here that they're reportable provided that a payee's reportable transactions exceed $20,000 in a year, and that the aggregate number of those transactions or payments to a participating payee exceeds 200. Now, for any of you who are not quite understanding this, I completely understand. I wouldn't either. I'm going to go through a couple examples that hopefully will clarify this. I love that little picture of the boy scratching his head, because that's certainly how I felt for a while. Okay, so here's the first test. Does your organization, your market, process electronic transactions to a substantial number of persons, 50 or more, on an annual basis? So if you have a market that has 30 producers and all of them participate in your token system, that you already are not responsible for issuing 1099s to your vendors. And that's really the issue that this gets at is, are you big enough to have to issue a 1099-K, which I'll show you in a moment, to your respective participating payees, i.e. your farmers. That's what we recognize would be the huge burden for markets, is having to have that additional layer of bookkeeping in order to issue those tax forms that would say month by month how much you were paying each of your farmers. So if you're fewer than 50 people participating in your network, then you're already not of substantial size according to the IRS. So if you are within a year making payments to 50 or more, then you proceed to the next step of the test, which is, are there any farmers in your system to whom you're paying 200 or more times in a calendar year, and in total, those amounts exceed $20,000 in that calendar year? If yes, then you do need to issue a 1099-K to each of those vendors to whom you're making those payments. Now, as EBT grows, as other forms of electronic payment grow, even if you're under that $20,000 threshold at this point, it's certainly conceivable that within a short amount of time you're going to be exceeding that $20,000 threshold. What is useful in that context is that the number of times that you're making those payments. In most cases that I've seen, a vendor will seek reimbursement for their tokens probably once a week, maybe only once a month. Some markets I know have a hard time getting their farmers to give them the token for reimbursement, because they hold on to them until they've got some critical mass that they want to get paid back for. So you'd have to be operating very frequently in order to have to make payments to any one particular payee, i.e. vendor, 200 or more times. Because this is a little technical, if there are questions that have come in and which people want clarification on these specific nitty-gritty, Amanda, I can try to address some of those as we go. So don't be shy about interrupting me if I'm not being clear. Okay. Waiting for my slide to advance here. Okay. So for the vast majority of you, I have yet to encounter a market that would actually be liable for issuing 1099-Ks. So that means that there are a lot of us that have to, instead of issuing 1099-Ks, document why we are exempt from having to do so. So some of this, I would hope, actually all of this, I would hope, is already being tracked by any market that's accepting electronic payment. A, the number of vendors to whom they're making payment, the number of payments that are made and the dates of those payments to each of those vendors, and then the individual and aggregate amounts of payments to each vendor. So you'll know how much you're paying them an individual time, and then at the end of the year, obviously, just adding up those sums. Not very complicated. It can be easily done in a spreadsheet, and Amanda's going to show you a little bit about that, some examples of that in just a moment. Now, I do want to illustrate, just in case there are any questions here, a couple examples. I don't know why it won't advance. Okay. So here's one scenario, the Pineapple Place Farmers Market. There are 40 vendors participating in a centralized scrip program, and so that's already below that substantial threshold of 50. Payments are made to vendors on a weekly basis, which means no more than 52 times per year is any one vendor getting paid. And the range of reimbursement is for each of those payments is between, for annual reimbursement is $200 to $16,000. So you can see on all three of those, the market would be exempt from having to issue a 1099-K to any of its vendors. And thank you for your patience while I slow. Okay, so scenario number 2 would be the Money Tree Farmers Market. This is a market that's substantially larger, not by a whole lot, but a little bit. So there are 65 vendors. Obviously, they are considered substantial enough in size. Payment to vendors is on a monthly basis, and the smallest of those vendors is reimbursed $600 over the course of the year. The largest is reimbursed $24,000. So you can see that there would be at least one participating payee farmer that would technically have to receive a 1099-K, except that it's not meeting that 200 payment threshold. So the payment to any of those vendors, even the ones who are getting $24,000 a year in reimbursements, is no more than 12 times per year. So the Money Tree Farmers Market would also be exempt. Now, in scenario 3, I'll just illustrate the one market that would not be exempt. A large public market that has 120 vendors participating, payment to vendors happens every day or as frequently as vendors seek reimbursement. The smallest gets $2,000 a year. The highest is $30,000 a year. So this market, big city market, would be responsible for reporting transactions through a 1099-K to any of those vendors that it made 200 or more payments over the course of the year that totaled more than $20,000 in that year. So it's an important distinction that the market would only be responsible for reporting the transactions to those particular vendors. So if a market meets the size threshold, the payment threshold, like the big city market, it's not liable then to report the transactions for all of its vendors at that point, just the ones that exceed those three thresholds, or the two thresholds of 200 or more payments totaling more than $20,000 a year. So in that case, this is what the 1099-K looks like. Actually, this is a draft form. I think the final form is going to be available soon. But essentially what it looks like is this. You would have to indicate the payee's name. So this would be the farmer's name here on this right side column, their address, contact information. I believe you have to have their, you have to have their taxpayer identification number, and you have to have the gross amount of third-party network transactions, so that would be all the annual payments. And then you would have to actually itemize by month the sum of the monthly payments made to that vendor. And this would aggregate credit, debit, EBT. So it would be the sum of all of those, whatever the market accepts. Now, if there are farmers in your market that accept EBT or any kind of electronic, for example, they have a Square, an app in which they can accept credit and debit cards. They're going to receive something like this from their merchant acquiring entity, their bank. So they'll get this directly themselves. You, as a farmer's market, at Central Payor, you will receive one of these from your merchant acquiring entity that will show you, as the market, your monthly transaction. But as we saw, you should not have to issue one of these subsequently to your individual vendors within your scrip system unless you exceed all those thresholds that we just reviewed. So, and just for your reference, these are due for the calendar year 2011 that we're currently in, and they would be due by February 28th, 2012. And I hope that everyone participating on this webinar today can breathe a sigh of relief that they don't have to worry about filing these to the IRS on behalf of their individual farmers. So here are some recommendations that may help you moving forward. One is to make sure that there's a written policy that states the payment expectations to vendors for participating in a scrip program. And it places time limitations on how frequently those vendors can be paid for their electronic transaction, scrip transactions. So, you simply create a limit, so you're not going to reimburse any more frequently than weekly, which is probably something that you're doing already. So just making sure that that's somewhere in written policy. If the IRS were to ever ask or were to ever approach you, you were ever audited, you could say, here it is in writing. There are no producers to whom we make anywhere close to 200 payments in a year. So a related question on the periphery of this is, does the IRS care about convenience fee if your market charges $1, $1.50, $2 fee on debit transactions, is that considered profit that the IRS wants to see reported? And I wish I was a tax advisor and I could give everyone universally appropriate advice. In most cases, it's considered related business income for any market that's operating as a nonprofit, and it's simply income that offsets the cost of running the program. And I think for most markets, it does not necessarily come close. Those fees, for example, do not come close to offsetting all of the costs of running the program. So there shouldn't actually be quote-unquote profit or retained earnings because of that convenience fee income. Went ahead of myself too. Okay. We've gotten several questions about unredeemed scrip, not necessarily on this webinar, but just over the course of the last few months. I know it's something that has concerned those who may, at the end of the year, have tokens, for example, that are not returned to the market. And it's never really known whether those tokens are have been dropped out of a shopper's pocket and just become stepped on or down in a gutter somewhere, if they're in the truck of one of the farmers that just forgot about it and maybe it's, you know, buried in the glove box somewhere, so that it has been exchanged for food, but it just hasn't returned to the central payer, the market, and what to do with that. Can tokens have an expiration date or not? How does the market deal with this margin? So technically, that unredeemed scrip is treated as a liability on the books because someone could bring it back at any time and redeem it for eligible food. It's, you know, at this point, the Food and Nutrition Service does not have a policy related to unredeemed tokens. A market can put an expiration date on the tokens as long as it's disclosed to the customer up front. And, you know, one would hope that they would have an ample amount of time, so you wouldn't make an expiration date any shorter than a year. However, from my last communication with folks at the Food and Nutrition Service, they are working on a policy that clarifies this, so that you, at some point when the unredeemed scrip, if unredeemed scrip were to ever come back into a system, it was written off and assumed to have been lost, a token that was assumed to have been lost and lost so long ago that there's no chance it's going to come back into the system, that it's still payable, it's still a liability, but the market can decide when to reallocate those liabilities for operational purposes. So it sounds like what FNS is moving towards is not specifically allowing the application of an expiration date, but allowing the flexibility of the market to decide when it feels safe taking whatever is a liability on the books and maybe reallocating it for future SNAP program advertising, for example. However, if those tokens, which disappeared 2 years ago, suddenly come back, then they are redeemable, and the farmer and the market has to honor them. So I would just be cautious about that. There should be something specific that's coming out from FNS. I don't really know the time frame on that. I'm not sure if they even really knew the time frame. But I did learn that they are pretty close to putting up, their FNS looks favorably upon third-party organizations operating SNAP programs on behalf of farmers markets. And for a while, it was unclear as to whether they felt comfortable with those kinds of arrangements where a third-party NGO takes on management on behalf of a market. Certainly now, and certainly they are not having any concerns about it at this point. So that's good news. So for further reading, there is a little bit of an FAQ, although you would have to familiarize yourself with the glossary terms that I referenced previously in order for it to probably make any sense, because it's very IRS-ese in its language. The 1099-K that I had up earlier, you can link to that, that form, and the final one, like I said, will be available probably in the next couple of months. And that link should work to whatever the updated one is. There are a couple resources for exempt organizations, those of you who are nonprofits and maybe want to learn a little bit more about how to treat related or unrelated business income. Here are a couple good readings that I found on that. So for those of you who are interested and not sure whether you're going to need to talk to an advisor about how to do the books, from a tax perspective. Most of us as nonprofits are exempt from this. But just to make sure you're doing everything right, those are a couple good resources. And I believe that's it for me. Thank you for bearing with me on some of that, and I'll pass it back to Amanda now, who's going to actually talk about some helpful resources for record keeping.
We've had quite a few questions come in on the chat box, and I wanted to address some of those before I started with my presentation, assuming that those questions might be distracting to whatever information I might present. So we did have a couple questions about points of clarification. So the $20,000 threshold that Stacy mentioned is for each individual vendor and not an accumulative total for all the payments you're making to all the vendors. So that threshold relates to one individual vendor to which you would be paying more than $20,000. We will be posting the PowerPoint online, so don't worry there about missing any points on the slide. A point of clarification, someone asked, if you have less than 50 vendors, but you have a vendor that exceeds $20,000, are you still exempt? And yes, as long as you have under 50 farmers or vendors that you are making payments to, you are not, I forget how Stacy put it now, of adequate size or of substantial size, and so you do not have to file 1099s for your vendors, as long as you have less than 50.
And just to clarify, you'd also have to have, so even if you had that $21,000 to a respective vendor, you would have had to pay that $21,000 in small, like in more than 200 small chunks that added up to that $21,000.
And then I'm going to let you attempt to answer this one, Stacy. If a market is exempt, they still receive a 1099 from the processor. How do they handle the income that reports, because it is not really income of the farmer's market? That's probably where they should refer to some of the resources you've mentioned?
Yes, I think that would be the best place to start. And that was a question that came up early on in investigating this, because it was clear that it was not, and what we had, the understanding that we got from the legal experts that we consulted with was that that money that you receive from your merchant acquiring entity for electronic payments obviously is ultimately goes to your participating payees. You are really nothing more than kind of a bank or like a holding entity. It's not income in that way. And I think that the IRS understands that, but I think that's also where it comes in, and what Amanda's going to talk about is how you actually demonstrate that it is a pass-through, that these were payments that were made to other entities. It wasn't, your money that you were bringing in as income to your organization. You're just passing it through. You're not really You're not necessarily charging. You're not making a profit from it, in other words.
Okay. And one more point of clarification. Stacy, you mentioned that you need to add together all of the payment types that you're paying, reimbursing, or making payments to vendors to. So you mentioned that if a market is accepting credit, debit, and SNAP through the scrip system, that all of those payments need to be combined together in order to judge whether or not payments made to one vendor exceed the $20,000 threshold. Is that okay? So
and you should know which is which, but for all of those thresholds that we mentioned, it's not just specific to EBT. It includes any kind of electronic transaction.
Okay. And then one final question. Are there any yearly reporting requirements at the state level? I think that, again, comes back to what kind of organization you are. So are you a nonprofit organization? Are you a municipality? I think that's an individualized question that I'm not sure we can provide a blanket answer to.
I'm also not sure how to respond to that. If you're, I would check with like a local, if not a nonprofit tax advisor, then at least like the state business registration or business taxation department. I am not aware of any specific rules, particularly with regard to any of the electronic transactions that states have any jurisdiction over.
Okay. I think that's all the questions that have been put forth so far. If I missed one, please put it again in the chat box so that it comes up at the bottom. I'm going to run through my presentation real quick on strategies for record keeping, and then we'll come back to any remaining questions at the end of the time. I want to start by addressing why you should keep records. And obviously, for the point of this webinar, we're talking mostly about financial accountability and that accountability to the U.S. government in the form of the IRS. But there's other reasons and other benefits for keeping records as well. You can track trends and the progress of your market, demonstrate the impact the market is having on the local economy, on the local community, and to inform market operations. So to be able to judge whether or not the way your market is functioning is functioning to the best of its ability. So there's lots of reasons to keep records, including the most important that we're talking about today, being financial accountability. So as far as data that must absolutely be collected, is not optional, is required, you need to be recording the number of SNAP transactions per market, the total dollar amount of SNAP transactions, which should equal the number of script or tokens being distributed to customers, and then the number of script or tokens redeemed by each vendor, which is going to be equal to the payment you're making to those vendors. So these are three pieces of information that are absolutely critical to collect. And pretty simple, probably information you're already collecting in some way, shape, or form, either through your batch receipt for the first two bullets, and then whatever kind of log sheet you're currently using for the third. And I'm going to be sharing a couple resources with you that can help you collect this data as well. So specific to IRS 6050W, this is just reiterating what Stacy already said. So the three pieces of information that are critical to record here are the numbers of vendors being reimbursed, or the number of payees, the frequency with which you're making payments, and the total amount being reimbursed or to each vendor, or the amount of payments. So like we've already addressed, you need to meet, if you have 50 or more payees or vendors that you're paying per year, you would need to meet the next two thresholds in order to need to report on those payments. So 200 or more payments per year for $20,000 or more. So hopefully this is just summarizing what we've already talked about. A couple additional recommendations for record keeping. It's important to track different currencies separately. So tracking debit and credit purchases separate from SNAP is important because there are different requirements for each program. So SNAP obviously can only be used to purchase eligible food items. No change can be given. And so those are important distinctions to make within the marketplace and within your record keeping. You also need to keep records for each individual vendor, and then you can aggregate that data for the market as a whole. And then it's also helpful to aggregate data by week or by month or by year to show progress and so that you can see trends over the length of your market. Oops, there it is. Some additional data that's optional to collect that could be very valuable are the number of first-time SNAP users that are visiting your market. Zip codes can provide you with a ton of information. So collecting the zip codes of your customers, you can then use those zip codes to see how far people are traveling to shop at your market. You can look up demographic information for different zip codes to see the demographic makeup of your shoppers. Zip codes can provide you with a wealth of knowledge and can be very useful, and it's something that people have grown accustomed to providing to merchants and typically are willing and able to provide without too much of a fuss. Another great piece of information to collect is weather conditions on market day. When you're looking back, from data from 2 years ago or data from 5 years ago, weather patterns, I'm sure all of us know, can really help explain why a market day was up or why a market day was down. So those are important contextual pieces of data to collect to explain the numbers you're looking at. Other optional pieces to collect that are very valuable: customer attendance, the number of vendors present and the product mix that day, the number of volunteers that were at your market that day, and the hours worked. That piece of information can be important in demonstrating the need for paid staff, or when writing grants to pay stipends to volunteers or for paid staff, to demonstrate the need for staff at your market. And then if you had any displays by community organizations present at the market that day. Again, just to provide some context for what was happening at the market, to maybe explain some of the data that's been collected. So tools for keeping records can be as simple or as complicated as you want them to be. They can consist of simple paper log sheets or as complex as tracking software like QuickBooks and other accounting software. Other great tools for record keeping are customer counts, dot surveys, surveys to customers or vendors. Photographs are a great record keeping tool. a picture's worth 1,000 words, so one picture could save you a lot of record keeping. And then simple observations or interviews with vendors or customers are also great record keeping tools. One important thing I wanted to emphasize before I talk about specific tools is that it's important to weigh the importance of the information being collected against the amount of staff or volunteer time and energy required to record such data. So how extensive your record keeping is should match the needs and resources of your market. So in other words, if the data you're collecting takes a lot of time and a lot of energy to collect and you're not using it, then why are you collecting it? Or if the way in which you're collecting data is time-consuming and energy-consuming and you don't feel like you're getting the value from it that's equal to the amount of time and energy you're putting in, then you may need to reevaluate how you're collecting that information. My final two slides are a couple examples of great record-keeping tools that are being utilized in Michigan. This is a customer. This sheet in front of you now records customer transactions, and the next sheet records vendor transactions. And what I've done is I've taken both of these and combined them into a sample generic sheet that can collect customer information, individual vendor information, and a cumulative market information. And that's what's available at the link below on our MIFMA website. We're running short on time, so I'm not going to bring up the actual website and show you, but it is available at mifma.org through the Food Assistance Partnership page for market managers. I kind of rushed through that because I want to make sure we address any questions before 2 o'clock or any that we can. Let's start with this one. This one says, how about individual markets that operate SNAP EBT as a coalition with a nonprofit partner? Are we counted as our single markets with less than 30 producers or as a collective with 63 producers? Each have separate FNS numbers and terminals. I would answer that by saying that the merchant acquiring entity or the bank will be issuing a 1099 to each terminal holder. So each organization that has a terminal. So if the separate markets have separate terminals, then they would be counting only the payees that are being served by that terminal. Stacy, is that how you interpret the question?
Well, I think there are probably a couple ways, and I think the merchant acquiring entity would probably be actually the best person to ask about that, because it's possible they would interpret any one entity, or it would be dictated by the taxpayer identification number. So if there's one taxpayer identification number that's affiliated with those separate FNS SNAP retailer licenses, then it may actually all come back to that one TIN number. However, if there are different TIN numbers for each of the respective entities, then it would probably be that way. I would really ask the bank how they interpret that, but I imagine it would go by whatever the taxpayer identification number is. That's what would define you as a third-party central payor.
Okay. There's one more question, and I'm not sure I understand what it's asking, so I'll read it and then see if anyone can clarify. It says the number of script or tokens redeemed by each vendor or the amount redeemed by each vendor. We have different values for different tokens. I'm not sure. That might be addressing one of the tools?
I'm guessing that the answer to that, if I'm understanding it correctly, it is asking, is it the number of tokens that are redeemed, or is it the value, the dollar value? So once the math is done, for example, if a token is worth $5, it's not just a token, it's $5. And I think it's the dollar amount that matters. The IRS doesn't really care how many scrip or tokens there are. That's up to the market to decide, but it does care about the dollar. So it would really be the dollar value.
Okay. Are there any other questions out there?
Amanda, do we have time to reference that other spreadsheet really quick? We may not have time to bring it up, but
Okay, I can bring it up. So there are two resources we wanted to direct you to. One is on the MIFMA website, which I mentioned, mifma.org, through the Food Assistance Partnership. Halfway down the page, under Tools to record SNAP transactions, we have a sample spreadsheet that you can use. The other is available through the Farmers Market Coalition resource library provided by the Saraboro Market. And this spreadsheet is really quite impressive. It has several sheets here at the bottom, sheets where you can insert numbers per month, for each farmer, so the number of tokens that they're redeeming, and then the total value of those tokens. And then this spreadsheet is set up to take the information you've inputted and put it into monthly and yearly dashboards to format it, to aggregate the data, and then also format it into charts and graphs. All very, very impressive formulas. So these are both great tools. The other one I'll just show you real quickly is more simplistic, and this was developed by the Allen, from an example from the Allen Street Farmers Market. But it has a page for recording customer transactions, for recording individual farmer transactions per market day, and then an aggregate page for all of the farmers and vendors reimbursed on one market day. So both of these resources are available.
And I just wanted to add that the spreadsheet that Amanda just referenced with the different tabs, that's from, right, the one she had up previously, that's from the Scarborough Farmers Market in North Carolina, and Jacob Roche was the whiz that developed these tabs and the formulas. So I just wanted to give them props for making this tool, which Sarah Blackland, the manager of the Scarborough Farmers Market, shared with us just yesterday. So we thought we'd make you guys aware of it.
Okay. I don't see any new questions at this time. I'm comfortable closing out the webinar if you are too, Stacey.
Go back to the future webinars slide.
Oh yes, definitely. Oh no. Hold on just a minute.
So there aren't specific dates to these, but I wanted to give folks a heads up about some upcoming topics for webinars that FMC will be doing, and I'm sure MIFMA has an exciting lineup for webinars as well available to its members. But these ones, there'll be one on November 10th. We're going to be doing monthly webinars. The next one will be about markets and their vendor relationships with their vendors and how to improve, recruitment strategies, retention strategies to continuously improve the diversity available at market and make sure that you're meeting the needs of your producers, since you depend on them for your market success. And then in December, probably the first week in December, we'll be doing a session on doing visitor counts and a variety of survey techniques depending on what information you're trying to collect. And then we'll be doing another session, I believe it's going to be early January, on price comparisons and affordability. So just stay tuned. If you're an FMC member, at least you'll be getting an update on this once the dates are finalized. But if you have any suggestions for other webinar topics, these or any others, please feel free to submit them through our website, or shoot myself or our membership coordinator, Liz Comiskey, an email, and we'll try to see if we could pull something together for you.
Great. Okay. Is there anything else we should add before we conclude? A big thank you to all of the people that helped help us gain clarification for farmers markets in regards to this rule. And a great big thank you to the Farmers Market Coalition for partnering with us to present this webinar. And then thank you for attending.
Thanks, everyone. Looks like we have a question. Is any, Amanda, are you still there? Looks like
I am.
Came in at the last minute. And if you have to go, I may be able to respond. Says, hello, I run the North Carolina 21st Century Farmers Market Program. May I speak briefly? Is that the same person that then types a question about smartphones? I'm not sure who that was.
So are you going to address the smartphone question, Stacey?
I can. That is something that we are exploring right now. There's been some pilots that have been done with smartphone apps and the WIC cash value voucher. Actually, I think that pilot took place in Michigan, and I know there's some other states that are exploring apps for WIC and or SNAP. And I think the jury's still out on that in terms of what successes we've seen from those programs. I think the test is always in not just the technology being ready, but is there the appropriate sort of outreach and education and training, and then consumer outreach that can correspond with the advent of any technology. So the technology does exist, but it's dependent upon the state agency, in this case the SNAP agency, having the app developed and customized for that state. So that's a great question. I think we all look forward to more leadership at the state SNAP agency level to implement that kind of technology and make it available for non-traditional retailers like farmers markets. I'd encourage anybody to create a relationship, if you don't already have one, with your state SNAP agency, and make sure farmers markets are on their radar and that they understand kind of the needs that markets in your states have, and helping encourage them to innovate with technology that can actually ultimately save them money in the long run. I don't know if that answered the question, but it's we hope to be putting out an article pretty soon that provides an overview of where smartphone apps stand. Robert, was that you? I don't know if that was your particular question. Are you there? Okay, I don't hear anyone. Well, in that case, hopefully that was his question and that sort of answered it. So I guess we'll take it back. We'll close out. I just want to thank everybody on behalf of FMC for participating in this webinar, and I hope everyone has a great rest of the day.